Welcome back to Market on Close. It's time for Options Corner. Kevin Green is here to take a look at the levels you should be focused on. All right, Kevin, first of all, great to have you. Second of all, I know it was 56.50 and we closed at that yesterday. We've broken through that. What should be on our radar now?
Yeah, I mean, if you're looking at today's action, obviously we're down about 0.4%, but we have been trying to make up some of the losses that we had early on in today's session here. And going into the close, it's going to be really key for us to be able to hold that 5,600 level. And we actually broke through it early on this morning, but we quickly recovered. And that has been a level that we've been focusing on here over the last couple of days here. We did see a nice little push to the upside, 56.50. We tested it briefly, and then we came back into this range. 56.30 is going to be on the radar right now. There is a sizable enough positioning there on the options front where you could actually have dealers trying to fade that move here. But in the event that we actually break above, I would actually look at that 56.50 level once again to the upside. And then once again, if you have any further breakdown, holding 5,600, I'm sorry, the label's not incorrect there. Holding 5,600 will be actually key. That's going to be that red line down there. But overall, this has actually been a pretty decent day. We've been able to hold up. We haven't seen a complete breakdown in the markets, and we are seeing a little bit of contraction. If we go to the daily chart, you can actually see that in the candle action there, where 5,600 once again has been able to hold. The 50-day moving average, which is sitting at around 55.65 right now, has also been able to hold. So that's actually really good for the bulls for now. Now, obviously, we have the Fed meeting tomorrow. The market's going to expect a lot of fireworks here, but if it's able to at least hold this 5,600 level and not really violate that and not violate the 50-day, I think that looks really decent right now when it comes to the bulls in this market. And then you're looking to the upside at around 5,700 as your key area of resistance. Some flows that actually were very interesting here today, though, Caroline, that I wanted to bring up. There's a trader that actually did buy tomorrow's expiration, the 5,700 calls for tomorrow's expiration for the S&P 500, around $2.3 million worth of premium for those calls here. So that's a very bullish bet. That was an outright trade. It was not a spread. It was an opening transaction. So there's a mega bull that is out there here. And what we're also seeing in the internals, and I want to make sure that everybody understands this, there's something called a dispersion trade. We have high implied volatility on a relative basis, meaning that vol is still pretty elevated. Premiums are still pretty elevated if you're looking at close to at the money, and even if you're looking at out of the money. But there's something called a dispersion trade where a lot of institutions will go long the major components of an index of the S&P 500, let's say the Mag 7, and then they'll actually short the S&P 500, looking for opportunity for outsized gains for those mega cap names relative to the perceived losses that they'll have on the S&P 500. The reason why that's actually very important here today, we are seeing a negative market, but if you're actually looking at the put call ratios for all of the Mag 7, from Amazon to Apple to you name it, Tesla, you name it, Google, go down the list, each and every one of them actually have a put call ratio that is below 1, which means that there are more calls being traded than puts on today's session. And in some respects, like Amazon, it's almost a 2-to-1 call to put ratio for those stocks. That just means that there is somebody that is actually positioning potentially for a dispersion trade here, for a crush in volatility post this meeting tomorrow, and maybe seeing some outperformance in the concentrated names within the S&P 500 rather than the overall index. So we'll see if it's actually going to pan out here. But this is actually a very interesting setup, especially when we look at volatility. This is the highest implied volatility that we've had going into a Fed meeting in some time here. So if we don't get any fireworks, we should see a crush in volatility. And once again, that should actually slingshot a lot of these stocks higher. And it seems like some institutions are actually positioning for that.
Okay, interesting. We'll certainly be paying a close attention to that tomorrow. I hear you also have a 15-year chart for us, so you're zooming way out. I usually do year to date, maybe 1 year, but you're going all the way out.
Yeah, definitely. Well, usually we'll look at the yearly or the monthly chart, if you will, at the end of the month. And I've seen a lot of requests for the monthly, just doing a check, because if you look at the daily chart, it looks a little bit more constructive to bullish to the upside. Weekly chart also looking the same for now. We're still testing key area of resistance, but there's been a lot of questions about what happened to the monthly chart. And the monthly chart right now is still setting up, if you're looking at the MACD, is still in a little bit of a bearish formation, rightfully so. This this chart takes a lot of time for it to be able to develop. The RSI did break that uptrend line, but it is starting to hinge a little bit. And I think the biggest question when you're looking at the monthly is are we in a 2022 style type of pullback here, where we had 2 months where we had the market move to the downside, we had a little bit of a recovery, a hammer candle, and then we failed again, which that MACD then troughed and then had that bullish cross back in 2023? Or is this more like COVID, where we had just an aggressive sell-off, came very close and even violated the 50-month moving average, and then saw a reset, which, if that's going to be the case, MACD is going to be lagging here. So I think if you look at the candle on the monthly and you look at the MACD and RSI, you still have to be skeptical that there's not more of a downside move over the next couple of months, rather than just you're trading, swing trading on a daily basis or even on an intraday basis. So the monthly chart is still saying caution for now, even though the weekly and the dailies are a little bit more constructive, Caroline. And that's kind of what we've been highlighting over the last couple of weeks here.
Okay, so our two options are, is it a 2022 style pullback or a COVID style pullback? But regardless, it's a pullback.
Yeah, well, the two options are, if it's more of a 2022 style pullback here, that means that we have more room to the downside and we would make fresh new lows this year. Or if it's COVID-19, we've already seen the lows.
Okay, good. I just wanted to make sure it wasn't like before the biggest pullback of COVID and there was only one way to go here. All right, Kevin Green, thank you so much. I always appreciate your charting and technical insights there.